Welcome to TMS Insights. It's winding up the reporting season. We're now into September. August was busy. We're going to bring you Ben Clark and Jeremy Hook, all the news from reporting. Ben, overall earnings per share growth through 2017 was up 18%, but if you took out the resources, which had a cracking year, up about 6%. We saw 30% of companies beat expectations and 28% miss, which means a lot fell pretty much on expectations. Overall, a reasonable reporting season.
Yeah, I think, I think probably not quite as strong as some of the fund managers were hoping for, and still definitely some notes of caution with outlook statements. CEOs, I think, are still pretty wary about giving themselves plenty of room to try and beat those expectations. Patchy is a word I would describe it. You know, there were some pretty amazing moves up and down in a lot of different stocks on the back of what should have been, we thought, pretty reasonable results or well communicated results. So, look, it hasn't been easy, but I think generally CEOs seem quite upbeat, and hopefully we start to see a bit more momentum on earnings. Yeah.
Three themes would probably just return to a bit of CapEx.
Yep.
Reduced payout ratios, so some dividends not growing as much, and not for bad reasons, good reasons. And then probably that some of the cost pressures in businesses are just rising a little bit. So probably electricity, one factor throughout. So let's dive into a couple of the stocks and see what's happened since we last brought you an update. Let's talk about a couple of amazing results, Altium and WiseTech.
Yeah. So the two mid-cap technology businesses. I think technology and healthcare seem to be two areas of our market that are experiencing quite strong growth. Definitely more than the broader market, but Altium's result in particular, I thought, was a real highlight. And not only was the result strong, the earnings guidance was lifted, which we haven't seen a lot of recently. But the CEO really talked about a new software release this year, which he believes will be a step change in the business. And he, in his own words, he said this is going to really propel us through to 2025. Yeah. So I love a CEO who thinks and talks long term. Yeah. And WiseTech was also, a very confident and assured CEO. Of course, is the major shareholder of the business, and they really are delivering on everything that they said, and then some. And this business could turn out to own the global software platform through which every parcel and package that is sent throughout the globe is tracked and monitored. And obviously that is a very big carrot if they can get it right. So early days, but it's going well.
Exciting. Talking about an upbeat CEO, Mike Kane at Boral was very upbeat and talking about the Headwater acquisition in the US, but also locally infrastructure spend, certainly giving the market a positive view of 2018 and beyond, Ben.
Yeah, I think it's been one thing that was interesting was a lot of the CEOs that are in industries or companies that are really at the fireplace of the economy, the very cyclical sort of things, were probably the more upbeat of those that we spoke with. And they, Stockland was another one that sticks out to me. Harvey Norman, Jerry Harvey was banging the table and saying the economy is going a lot better than people give it credit for. It feels like there's this continual underlying pessimism amongst investors.
And glass half empty sort of approach when things aren't nearly that bad. So it's just the way that investors are sometimes. But let's move over to the hospital or private hospital operators, Healthscope and Ramsay. Neither performed well post-reporting. Again, a little disappointing from Healthscope and not positive guidance from Ramsay.
Yeah, look, I think in the case of Ramsay, new CEO, they're the largest hospital operator and owner in France now, and Macron is yet to release his major healthcare piece. So I think that they're probably being quite conservative on the year ahead for the French business, and maybe, I think they will end up exceeding the 8 to 10% earnings guidance that they gave the market. So that was, I think, a part of it. But the Australian hospitals are going gangbusters, which is interesting when you look at Healthscope's result, that they are materially underperforming on that Australian hospital business.
Yeah, no, it gives you a little bit of a perspective that you don't always hear. We tend to want to believe what the management tell us, but you need to check and double check, and there's a really good example that one cancels out the other. Sort of parlaying therefore into a good result from Medibank Private, which again surprised the market. It wasn't expected to do a lot, produced a good number, Ben. Good cost management, the main driver.
Yeah, look, it certainly surprised me. This isn't a business that I thought would be growing so strongly, mainly because there has been quite a lot of people exiting the private health system as it's become more and more expensive. But where they're doing very well is, it's a government run institution, which in private hands is being run much more efficiently. Yep. The balance sheet has got no debt on it, and there's the potential for some capital management down the track. And Craig Drummond, seems to be doing a good job. So certainly one, that's exceeded what I felt, and should probably be on our radars again.
Blackmore's reported and had one of the better performances of any stocks post-report, more or less because the market was so unexpected of a reasonable result. And it's had a hell of a year, but good news for Blackmore's.
Yeah, definitely. Look, I think the real surprise was after the 15-16 phenomenal year that they had. Revenues only fell 3% this year. So, they've done a great job at continuing to drive sales. Of course, the earnings number looked worrying, but it was really due to some inventory issues in the first quarter, a right setting of the cost base as the Daigou trade disappeared very rapidly. And if you run their fourth quarter numbers through to this year, so if there's no sales growth, but on that much lower cost structure, the business should deliver quite strong earnings growth on last year. But it's how strong. But certainly the business seems to be handling a very rapid shift in regulatory environment and also in the shopping habits of the Chinese.
Yeah, done well this time. A very good report from BHP, and again we've seen upgrades. We've seen analysts increasing their valuations based on higher commodity price assumptions. So great to see that the big Australian back in form, Ben.
Yeah, and this Elliott hostile sort of shareholding has seems to be paying off because they're going to float off the shale or sell the shale division, and that was one of the key sort of planks of the Elliott proposal. So I guess it's good to see that the management team are responding to criticism and trying to create more value for its shareholders, because it has, you wouldn't say it's been a business that's really showed a lot of the benefits of the big boom that we saw a few years ago.
No, exactly. Nice dividend payout ratio increase there and good dividends altogether. A company that'll come after you if you do the wrong thing by shareholders, IMF Bentham, reported this time around. Good set of numbers, Ben?
Yep. Great set of numbers. Since the result, they've also won 2 quite significant cases. I think this is a business we both really like the look of. $3.7 billion pipeline of work for them now. Still only about a 300 million market cap. Really good dividend yield, strong balance sheet, and a cracking year last year. And hopefully more to come.
Yeah, no, they look good. Event Hospitality, which is obviously the operator of Thredbo. It has the cinemas, Gold Class and Event Cinemas, but it also has a wide range of property assets and the hotel group, Ridges, QT and Atura.
Yep.
Good numbers. Thredbo the highlight.
Yeah, much improved numbers as the business is, changing a lot of the Ridges hotels, refurbing them and into QT and reopening those hotels. We're starting to see the earnings drop to the bottom line. Cinema division again had a softer sort of 6 months, mainly I think due to there wasn't a lot of big blockbuster movies sort of being released during that period. But of course the thing I keep coming back to is the property holdings, and Alan Ridge as the chairman and the largest shareholder is probably one of the best sort of property developers and guys. So you've got someone who's managing that portfolio on your behalf who's got a lot of reasons to want to make money out of it. So that seems to be going pretty well. Yeah,
definitely. Vocus was a disappointment, there's no doubt about it, but that was largely expected. Is there a way forward there?
Well, I think, the big news was that 2 private equity players who made takeover bids walked away, and from all accounts, the major shareholders of Vocus wanted a larger price for their shares than they were willing to pay. They believe that it's a bad point in the cycle to be selling out. We know the company's got great assets, but they've been very poorly integrated and managed. So this is a make or break year for Vocus. I think management will be on the front foot in trying to, address those concerns and to make 350 look like a poor price, and they have done better. So, but we need to see the results, and we need to see them deliver on what they've said. So it certainly hasn't been one of my better picks in the market, but hopefully we see a better year ahead.
One that did outstandingly, just to wind up, was Woolworths, which was a great result and confirms how Brad Banducci has turned around that very, very large beast into a profitable supermarkets and liquor group.
Absolutely. And Big W, of course, is the only negative that you could pick out, and Kmart and Target are really doing well at Wesfarmers, and that's a big issue for them. But the turnaround is in place, it's happening, the numbers don't lie, and again, he was a bit sort of cautious and keeping expectations low about the future, but I think we'll find that, again, he exceeds those numbers, and Woolworths looks like it's on the comeback.
Definitely. Well, that's a wrap of the last part of the reporting season to end that full year results period. We're going to see you again later into September with updates from the market, but we wish you well for the reporting season's wash up, and we think we're going to have a good back quarter for the year.